Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. In this episode, we talk to Tamagoyaki from Putty Finance. Putty Finance is a unique protocol that allows traders to buy puts and call options for NFTs and ERC-20 tokens. They just went live on mainnet and we went deep into how the protocol works. And let's jump into it. Let's welcome Tamagoyaki. Here we go. Welcome to the fifth episode of Look at My JPEG, and today we have a guest from Putty Finance. Everyone, please welcome Tamagoyaki.
Hey, how's it going?
It's going well. Thank you for coming on to the pod. Appreciate it.
Thanks for having me.
Yeah, very excited about this one. For those that are listening and for, I guess, the podcast listener later on, maybe give us a little intro of yourself, and then we can kind of dive into Putty real quick after.
Awesome. Yeah, I'm Tamagoyaki, one of the co-founders of Putty Finance. The goal of Putty is to be an OTC options platform for NFTs and ERC-20s. We just launched to mainnet the latest version release on Monday. And yeah, I'm excited to see what we can do on top.
Super cool. Do you have an origin story of how Putty came to be? What was your inspiration? What did you find? And how did you get from where you were to where you guys are now?
Sure. So I'm one of the co-founders with my other co-founder, Out.eth. I actually, we met in the Optimism Discord. He posted this video of him like programming for 4 or 5 hours, and he like no sound, nothing, just like instantly. And then at the end, he was like, "Hey, if anyone wants to talk, just like ping me." And I was like, "Okay, that's psycho. Like, I obviously have to talk to this kid." And so from there, we just like started talking, found out we were in the same NFT, like some of the same NFT collections that we both held. Actually, a little bit recently, it was like right after the first wave of like NFT hype. And from there, we were like, well, what if we can build a protocol where you can buy like a put option or like buy insurance on your NFT collection? And that's kind of how Putty was started. It was just like a contract that we would build for ourselves to be power users to like buy puts from our friends, really. And then the use case obviously expanded with time.
When was this? Was this like around this time last year?
So we met earlier, but we started formally like talking about Putty together at the start of this year, like January.
Got it. Yeah, that makes a lot of sense. We started just building about around the same time as well. That's really interesting. For those that don't understand, can you tell us a little bit about like the 101 of what is a put option, and then we can get into like insurance and maybe calls later on.
Yeah, sounds good. So like an option in general is like paying some person a little bit of money for the right to either buy or sell an asset to that person at some time in the future. So for a put option, let's say that I'm an NFT holder, I can pay someone else like let's say 1 ETH to be able to sell my NFT to them at a predetermined price at any point in the next like 30 days, let's say. So it effectively allows you to have the price drops considerably. So like if the current price is 50 ETH, I can say, well, I'll give you 1 ETH right now if in any point in the next 30 days, I can sell you this NFT for 40 ETH. And let's say like 2 weeks from now, the NFT price has dropped to 25 ETH. All of a sudden, this is for 40, but it's worth 25. So I've like covered myself from the like full downside potential of the NFT going down. Does that make sense?
Yeah, definitely. And let's say if we don't exercise, we call it exercising option, right? This is say if you don't exercise the option, you kind of lose out on the premium you pay and that fee you pay to the option writer, correct?
That's right. Yeah, like all you lose at the start is that small fee that you paid to whoever is selling you the option. Regardless of whether you exercise or not, you've paid that fee. But then, like obviously, this is like the cost of having this agreement in place for the next race.
Yeah, so the way I'd like to look at it, it's always like very easy to understand it if you think of it as an insurance. Like insurance companies typically take an insurance fee in the event that if you have an accident, they have to cover some costs for your car or for your medical bills. And if you don't, end up claiming these sort of insurance claims, i.e., exercising your option, they still get to keep the premiums for for this contract, basically.
That's right. Yeah, the whoever sells the option is basically going like short on the volatility. They don't want to see the price move dramatically to the downside, and then whoever's buying that option is basically saying, "Well, I think there's a chance that the price could either, if it's a call, go up by a lot, or if it's a put, go down by a lot." And I want to protect myself against that chance.
Yeah. So now that we're talking about calls, maybe give us a little bit of, well, first of all, tell us a little bit about Putty Finance, and then we can get into what calls are.
Sure. So yeah, when we released Putty's MVP, it only had put option functionality. And shortly afterwards, I mean, I was talking to some of the guys from Florida, and we kind of decided to build out this secondary application that had a different design mechanism, where you would be able to sell calls on your NFTs. And the way that the order would be filled is you'd specify a premium and a duration, and then there would be a Dutch auction that ticked down from a very high until I decided, okay, now is the right time. Now is the right strike price for me to pay someone this premium. And so we built it out as kind of like a little experiment, and it became like the first ever covered call vault strategy live on mainnet. We found out that people like reserve strike price that the auction would never be able to go below. They set it really high. So essentially, the auction mechanism itself didn't actually matter that much. It would just rest at that reserve strike price, and then someone would either fill it or not at that point. So it just acted as like a 24-hour delay on the. So what we did was for Putty's main version release that we just released on Monday, we just have call functionality as well baked into it. So we offer both put and call limit orders on Putty right now. And call is more of like the little brother protocol where we can like test out different cool stuff we want to build.
Yeah, makes a lot of sense. So I'm and maybe I'm doxing myself here, but I'm the first person who bought a Milady, call option
That's
on
right.
your platform, and so I'm very excited about it. So now that we've covered what puts are, tell us a little bit about what calls are and how they benefit an NFT, speculator and whatnot.
Sure. So calls are basically the exact opposite. You basically pay someone a small amount for the right to buy an asset from them at some point in the future at a predetermined price. So if the current price of a collection is 50, you can pay someone a small amount at a strike price of 70 ETH. And if that collection goes above 70 ETH, you only have to pay the seller 70 ETH. So you're basically you basically pay a little bit to have leveraged exposure to the upside of that collection. And the person on the other side of the trade gets to collect that premium for you. And then they are the ones that don't think that the NFT collection will moon. So you basically get to like bet on its upside there.
Yeah, and then one of the most interesting thing, like I think why people are very drawn to options is in the case of call options, really what you can lose is just the premiums that you pay to the option writer. Your upside is quite unlimited if you're make the right call.
Exactly. And like we've been talking with some people about like listing the digis on Putty degens to come in and bet really small amounts on deep out of the money options on that collection or other collections too. And it basically gives you a way to pay just a very small amount to be able to have exposure to that upside if the collection moons.
100%. So while we're talking about, you just mentioned out of the money, tell us a little bit about what in the money is and what's out of the money.
Sure. So an in the money option is an option where the price has moved past your strike price. So if the starting price was 50 ETH and the strike price was 70, an in the money option is whenever that's like NFT's price moves past 75 ETH. Out of the money is any time when the price has not moved past that strike price. So when you're out of the money, you don't really want to be exercising your option because you'll be exercising at a loss. You'll be exercising at a gain.
Yeah, and this is the case for both puts and calls. So if you have a strike price when you're buying puts and the price goes down, you're probably going to be in the money. And also on the other way around on calls, if you basically if you're in advantage and you're in profit, you would be typically in the money.
That's right. Yeah, it's both ways.
Yeah, 100%. Yeah, thank you for covering all that for those that maybe don't understand options that well. And tell us a little bit more about, how the protocol has been used so far, because you mentioned mostly, it's for NFTs and ERC-20s for exotic options, and maybe give us a little bit of explanation on what is an exotic option compared to traditional options like you would see in equity. And people always ask, like, hey, can I trade option contracts? Because a lot of times when you have this pay for this premium, this contract becomes tradable in the form of, typically you see them on these options exchanges. It could be dealt with fungible tokens or stocks and equity. Is there a future where we see these NFT contracts, option contracts being traded as well?
Oh yeah, very, very much so. So right now on Putty, if you were to buy or sell an option to someone, you're minted an NFT that represents your position in the trade, and you can sell that position to someone else at any point while the option is live. And so, or you can like transfer it between wallets that you own, or even give it to someone else, right? Like you can do that key. And so like basically, you have the ability to create a secondary market on top that trades in the option agreements themselves as opposed to the underlying assets. This is something where you usually typically need a little bit more of a liquid market than what that currently exists in ERC-20s. But in the future, let's say we have that market, it's very easy for us to put that functionality on our front end because we've already created the positional NFTs themselves. And then back to your earlier question, or like what you wanted to talk about earlier, the like first couple of uses that we've seen from our protocol is like, for example, there are some NFT market makers or NFT lenders that want to hedge their downside on the NFTs that they hold as inventory. And so for them, it makes a lot of sense to buy a put option because it acts like a pretty perfect hedge. Like if you take out for some, like you give someone a loan that's worth 30% of the NFT that they give to you to lock up as collateral. You can then buy a put option that's 70% out of the money to match that loan to value ratio. It's a little bit technical, but I guess what I'm getting at is you can basically be completely hedged. The NFT price just drops and the floor collapses. You still have the ability to be like equal by having that put option agreement. So that's like one use case we've started to see. There's going to be a pretty big transaction going on Putty shortly that is a reflection of this use case. Other than that, want to sell calls on their NFTs. And like we've done a transaction yesterday with Florida where they posted a limit order. So yeah, if anyone wants to buy calls on 10 miladies, just like it's literally sitting there on the order book waiting to be taken. So this is the kind of use case we've started to see early on.
That's awesome. Maybe give us a little bit of idea and pick and color on if a lender were to, like you mentioned earlier, 70% out of the money taking out a put option. What does a premium look like typically for out of the money option contract on puts?
Yeah, so it really depends on the collection. You can use something like a Black-Scholes model to calculate that premium, even though Black-Scholes doesn't really fit so well with collections that are so illiquid or have like non-normal price distributions, like something like an NFT. But basically, to simplify it a little bit, if you buy an put option that's 70% out of the money, as long as the volatility of the asset that you're buying a put option for is not crazy high, this put option will be extremely cheap. So for folks right now, the put premium for an option that's like 70% out of the money is basically like it would equate to a 5% APR if you factor in smart contract risk on top of what like something like Black-Scholes would calculate for you. So yeah, like it's extremely cheap to buy a super deep out of the money option like that, given that the volatility is not insanely high.
Yeah, that makes sense. So I'm just kind of thinking as a term of a mindset of a lender. Typically when you give out a 30-day loan or 60-day loan on NFTFi, and we've talked about this with Goblin Sachs last week on our episode 4. For those of you who haven't listened to it, maybe you can go back on our Spotify account and listen to it. But what we generally found, what they found is the loans are most profitable in between 7-day period and 60-day period. Anywhere in between is not as good, and they've done extensive research on it. It's quite interesting. They get an average of I think 30 to 60% APR on these loans. It's incredible. And if they're simply able to take out, I don't know, like a fraction of that, like I mentioned, 5% APY on these loans to simply, protect their downside in the case of default, it's a pretty great insurance policy.
For sure. And like for loans that like for a loan itself, it actually functions quite similarly to a put option. The only like really key difference is that for a loan, you get paid the end, but you also have access to that capital as the borrower from the very beginning. So naturally, like a put option is a little bit different. You get paid the premium at the start, but you don't have access to the underlying capital during the like duration of that option. And so loan payoffs for the interest payment are quite similar to put options, except they're priced a little bit higher usually. We've written like some research about this. We're planning on releasing it shortly. But what you find is there's like an incentive for lenders to buy these puts because for the most part, they'll be cheaper than the loan agreements that they've already agreed to. And so once you eliminate all of the downside risk to that loan, you're basically just left holding something that could be like smart contract risk is really the only thing you have to account for. And so every like difference in what you charge for the loan and what you pay for the put option is basically free money.
Yeah, that's incredibly interesting. I think once we see the volume start to pick up a little bit more, which is something I would love to talk to you about, just like openly, like what do you think of the current liquidity, problem is with the spots, on exchanges? Do you think SudoSwap coming up, emerging as a new protocol can kind of solve all of these problems? And how does that affect Putty? What are your general thoughts on liquidity in general?
Yeah, so I think the biggest like need for this market is more liquidity, like you said, and that will come. We're starting to see these large market makers get into NFT market making on spot, using also even using existing platforms like OS or Looks or whatever. And so the good news with that is with more liquidity being brought into the space, even from a pure market making sense, you get like a much healthier market that can sustain more growth, basically. Because right now, if I want to take a loan out on a punk, I can price it pretty advantageously to myself, and it's an extremely inefficient market, which is good for anyone who's selling the loan or anyone who's like then selling the put option underneath. But in general, I think the FT market making on spot markets, as well as like new financial products like perps or options, and then combine all that with potentially more sophisticated investors entering the NFT space. I think all of this is like a pretty good melting pot of ideas that will eventually NFT volumes much higher than what they currently are at.
I think so. I think with the recent trend of these royalties being removed, on some platforms, and including SudoSwap, what I'm personally seeing is it incentivizes the projects of NFTs, like it could be Bored Apes, could be Punks, or whoever it is, to actually work with market makers and start providing liquidity. Because if the trend is, the projects start receiving less and less creators royalties, it should incentivize them to, carve out a tranche of the treasury just by providing books on spot with minimum fees, but they can earn LP fees. That's a good way for them to continue to get, payouts on these trades. And which subsequently really provides a lot of liquidity, for the market in general and for protocols like ourselves to operate in a more efficient way.
Yeah, for sure. And exactly like you said, it's really going to depend on the what the new NFT collection model looks like. And I know that there's a fair amount of projects right now working on approaching it from a more spend, maybe just the PFP scene that we saw in the last cycle. So I'm pretty excited to see what that new entrant will bring to NFT markets in general for financialization.
Yeah, definitely. And I think once those more structured, finance-based NFTs and perhaps, and these as market get more liquid, there's a lot more we can do than just perps and options. We can potentially, look into stuff like structured products that combines option strategies and perps all together. Something that comes to mind would be like, like user deposit NFT as collateral, get a loan for 30 days, for example, and then use that loan to buy NFT and write these cover call options to earn premium. So essentially you can use that premium to pay back your loan. You get essentially free loan without any premiums you need to pay. Things like that I think are very, very interesting, and very, very interested to explore with protocols like you guys to potentially work on something similar.
Yeah, for sure. I also think the development of, well, this is obviously you need liquidity to have this be effective, but the development of oracles for at least some of the blue chip collections, exactly what you guys are working on. I think this is a very step forward towards that, and also towards introducing things like margin on a consistent level and stuff like that.
Yeah. Tell us a little bit about Putty. Like, do you guys use an Oracle? In what case do you use Oracle? What do you use if you do use Oracle? Do you have one?
Yeah, so because it's purely OTC, we don't need to rely on an oracle. You basically, everything is decided by the buyer and the seller of the agreement. And so what we do use is, in the UI itself, is some volatility and price metrics provided to us by Spice. We don't need to rely on an oracle because it's an OTC market. Let's say we were to introduce margin in the future. At that point, you have to spin up an oracle or utilize an existing oracle in order to facilitate the exercise of those options that are trading on margin. Yeah, really no need for us to utilize the oracle systems that have existed right now.
Got it. Yeah. Makes sense. For those that maybe don't understand what margin trading with options look like, can you give us a brief breakdown, like an explain, like a five sort of explanation of what it is?
Sure. So right now, if I wanted to sell a put option to someone, I would need to post the entire amount of that strike as collateral for that put option. So if someone wants to buy a put option that with a strike of 25 ETH, I have to put 25 ETH in. What having a margin system allows you to do is to not have to put that full amount there. So you basically have the ability to only put 10 or 15 ETH or 5 ETH and still cover something that's worth 25 ETH. So your position power grows considerably from the ability to do something trading on leverage looks like. And so,
as a put option seller, yeah.
Yeah, exactly. And so all this, this is all great, but because you're trading on leverage, you now have to deal with the restrictions that leverage places on you. So if your position becomes more risky. If the price is like trending down, you may have to close out your position because you haven't posted the significant margin to continue. Does that make sense? Yeah, it's a little more complicated than just vanilla options, which are already a little bit more on the complicated side in general. But yeah.
Yeah, that is quite interesting. So in a case where you have to foreclose your position, what happens to the contract? Like if the buyer still wants to exercise his option, in 30 days time, but you're trying to close out your position as a put option writer because you don't have enough capital to post it, what happens in those cases?
Well, like it would be pretty similar to what I'm assuming you guys are doing at NFT Perp. So you can, I mean, if you want, you can even explain it. You probably know better than me, but basically, like what will happen is someone will come in and take your position from you and post that margin. But
Yeah,
yeah,
really liquidated. Yeah, in that environment. Yeah, or closing out. That makes sense. Yeah, thank you for explaining all of that. Really appreciate it. Tell us a little bit about I guess like building this really interesting NFT finance and options protocol for NFTs. What are the things that you kind of picked down, like learned so far? What do you think some of the things are building in the space is sort of underrated and that you kind of learned a lot in the last, I don't know, like 8 months or so?
oh man, so much. Like if I had to go back to how we started, I would change so much about the way we even thought about things at the beginning and all that. And I feel like there's still so much to like every day is completely different from the previous one. But some of the big things are probably like maintaining conviction on what you see as a potential opportunity. It was not always obvious that NFTs would like need this type of functionality. Able to kind of map things from experiences that you have had in the past, potentially from traditional finance or also like from a perspective on how you see like NFTs looking like in the future. This is pretty important, I think, for anyone that's building. Other than that, the biggest thing is probably like have like a very big team or whatever, but at the end of the day, you really want to be moving as fast as possible. And if you can accomplish that with less people, sometimes they can be more efficient.
Hmm.
So, I mean, we only have myself and my co-founder working on Putty, and it is a lot of work. Like it is very time consuming, but I do things with a lot more autonomy than if you had like, I don't know, a little bit more of a larger setup.
Yeah, we definitely have a bigger team over at NFT Per because there's so many things we want to do at the meantime. One thing that I would say I've learned a lot in the past, like 8 months, 9 months or so building NFT Perp is the more you talk to other founders, the more you talk to very really just like-minded individuals in the space, the more you can kind of pick up on things you should be working on as a protocol and ways you can collaborate. So I think most people are mostly sitting at home, working and don't really have a social life like myself. If you can talk to as many founders and people as possible, because it really helps stimulates initiatives, help you think differently and pushes you to be just aggressive and don't procrastinate and get shit done.
For sure. I would say that like every good thing that's happened with Putty has been as a result of talking with someone else that's either building or like interested in what we were doing. Like literally cannot overstate how important it is to meet people and just talk to them on things. It's led to like every good thing. Yeah.
Yeah, 100%. And we're just incredibly, like humbled by the amount of interest that's gone towards NFT finance and towards like protocols like Putty, like NFT Perp, and all these other different protocols that we're just very, very interested to work with other protocols as well. And I, don't want to drop any alpha here too early, but I think we can expect some Putty slash NFT Perp collaboration relatively soon in the future, and we're very, very excited about it.
Yeah, for sure. I'm definitely excited for something like that, right? Because the possibilities of combining perps and options together, unlocks a lot of different things you can start doing.
Yeah, 100%. Well, how do we find out more about Putty and how do we follow you? What are the next things we should expect from Putty Finance? Maybe let listeners know.
For sure. So you can follow us off this like Twitter account that's on the call at PuttyFi, or you can check out the mainnet application at putty.finance. Hop in our Discord. You can check out like the Black-Scholes calculator we built. If you guys want to do, you're more than welcome to. And if you come in the Discord with questions or problems or whatever, we'll answer as fast as we can. Like we're always trying to help people that are interested in what we're doing. So definitely feel free to learn more at any of those things. I would say the next thing that we're really focused on short is bringing on more users to the platform and getting more like DAOs and institutions to come in and transact in these options. But beyond that, from like a functional perspective, we have some plans to build out some pretty cool systems on top of Putty that maybe make it a little bit more accessible for retail users to use. And in general, like I would say the next couple months are going to be pretty heads down grinding on some of these things. I don't want to like share too much, but just like keep an eye on the announcements, I guess.
Awesome. Yeah, you can always go to Putty Twitter, give them a subscribe and turn on your notification bell so you don't miss their updates announcements.
Yeah,
And
for
same
sure.
thing, the NFT Perp, make sure you hit that subscribe button or follow and turn on your notification bell. It's been a blast talking with you, Tamagoyaki. Thank you so much for coming on and answering the questions and letting the community know about what you guys are building.
Yeah, cheers. Always a pleasure. And anytime, yeah, anyone wants to talk about anything with options on NFTs or even like ERC-20 tokens, just hop in and DM me. I'm always open to talk. Thanks for having me.
Thanks for coming on. All right, everyone. Thank you for coming on to the 5th episode of Look at My JPEG. Have a good one wherever you are and see you. Have a good weekend. Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcasts from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.